Are Vancouver real estate prices headed for a market correction? Hello, everyone, and welcome to this week's episode of the Vancouver Life Real Estate Podcast. Today is an interesting day because we are going to look at the May stats for the Vancouver real estate market, and we'll see if they fit some of the projections and predictions that we made in previous episodes coming up to today. So it's going to be a very interesting episode. And more importantly, I think we're going to wonder, are we actually headed for a price correction in the Vancouver real estate market? But before we talk about anything, please, guys, please look down and hit that subscribe button so you don't miss out. If you're thinking of buying or selling, you don't want to miss these videos. So, Dan, what's going on with sales in May of 2021?
Yeah, let's start with sales because volumes is a big indicator of what happens in the market. And so in May, we saw just under 4,300 units sell. This is for all property types and across GVRD. So understandably, last May in 2020 was a bit of the height of the pandemic when people were still kind of holding their breath and definitely not thinking about real estate. And there were very few homes that sold that month. So, the 188% increase in sales volume we see over that month, an important data point, but a bit of a throwaway in the sense that obviously, last May was a bit of a one-off for that month. But where the numbers start to really come into play here is that we saw a 13% decrease in sales just from April and a 34% decrease in sales from March. So that's two pretty significant months of sale declines, big numbers. Obviously, March was the height and will be for a while. And yeah, just to kind of wrap up the thought, while these numbers are declining and declining rapidly, I guess the other side to also, be aware of is we're still about 28% above the 10-year average for the month.
Yeah, I mean, largely, I look at that pack of stats, if you will, and that 188.4% increase, I think, is, like you said, a bit of a throwaway number. The benchmark for May of last year, I mean, it's not really all that relevant when you consider, even the 10-year sales averages and things like that, right? So that aside, if we look at the 13% decrease from April and then a 34% decrease from March, it's starting to build a trend line, right? And I think that that's something that buyers and sellers need to be made aware of because it should change your behavior. When we start to look at the new listings or the new supply of property coming onto the market, for the month of May, we saw 7,125 new listings. Year over year, of course, this is up 93.4%. But again, a bit of a throwaway number there because the benchmarks were all over the place. However, when you start going to the previous months, we're actually 10.2% down compared to April, and then 16% down from March as well. So that should help slow some of the price adjusting and some of the decreases that we're seeing in sales. But generally speaking, we've got 2.5 months of inventory. However, and this is a big note, this is the second highest new listings we've seen in May, totaling back to 2008. So it's not a small number.
That's something that, the board kind of skipped over, I feel, when they made their monthly announcement talking about the new listings. So, we are definitely seeing decreases off of the height of March and definitely coming down from April as well. But do keep in mind that like Ryan just touched on, this is the second highest May ever recorded as far as new listings. And that, of course, is going to help build up inventory, which will further slow the price increase or start the decrease, which we'll get to shortly. Also worth noting, I mean, this was the fourth highest new listings month ever recorded as well. So really, really strong month of listings last month.
Yeah. Yeah. And even though it's down from the previous months, we're also coming off the highest highs that the real estate market has seen. So again, take it with a grain of salt, right?
Yeah, that's it. I mean, 3 of the highest inventory months ever were, this year. So, we're seeing substantial product coming to market in 2021.
Right. So let's talk about total inventory then. The total current supply on the marketplace. When you compare it to May of last year, um, it's a total of 10,970 units, which is a 10.5% increase. Um, Again, total inventory 7.1% increase compared to April of 2021, and this is continuing that softening trend that we've been calling over the last couple of months.
Yeah, you look back towards even February, right? A couple months ago, we're up almost 25% in total inventory since then. And this is, of course, the third consecutive month where we're seeing inventory numbers climbing. A direct result of that is going to be your price softening because people have
Mm-hmm.
more choices. And when you have more choice, you have less bidding wars. That's simple, right? So properties we're seeing bought at a lot more of asking or below asking as opposed to so many being bought over asking price.
Yeah, and I think that brings up an interesting point because when you look at some of the busiest years that we've had in recent history, um, from October 2015 to April, say 2018, levels have never hit this sort of high, right? And that's another major point to recognize. So, um, when we look at the current inventory, again, it's growing. So the detached side of the market growing far more at 3.5 months of supplies now. We look at condos, 2.3 months of supply, and townhouses, a scarce just over 1.5 months, right?
Yeah, so clearly the
Um,
townhouse market is the most kind of sought after or active right now. And yeah, to kind of accentuate a little bit more on your point, Ryan, about that 2015 to 2018 run, that was when
yeah.
we saw the previous biggest and quickest price appreciation run up was during that time, right? So inventory was so low that obviously the result was these bidding wars that pushed prices up and up and up, and all that FOMO and fever really kicked in.
Mhm.
That's what we saw happening, of course, for the last about 12 months of this market. But again, we've just kind of hit that crest. We're above where we were the last kind of fever pitched pace of price appreciations in the market. What does that say? That means things are going to soften as well.
Mhm. Yeah, and I think the other interesting note about the inventory notes, where we said detached 3.5, condo just under 2.5 months, and townhomes just over 1.5. That really sort of to me illustrates where prices have gone, what people are doing now as a result of prices, and we're seeing prices of detached homes now are largely unaffordable for the vast majority of people. So townhomes have become the next option, right? And just the overall inventory of townhomes, generally speaking, is the lowest of all of those three to begin with. So now you're having people jump into townhomes and eat up that supply, and condos are starting to spill over as well. But um, that being said, all of these numbers are increasing, right? So take that with a grain of salt.
Yeah, they are. I mean, you look back to January and February, which were incredibly active months here, and you can kind of flip that townhouse for detached because it was detached that only had about a month and a half of inventory, and of
Mm.
course we saw those prices reflecting that.
So my favorite indicator is up next, and that's the sales to active ratio. This looks at activity levels across the board. Um, for the month of May, we were still in a seller's market at 38.9%. But again, that means nothing without context. So when we look at April, it was 46% by comparison, and then March was 58% by comparison. So where are we headed, Dan, and what does this mean?
Yeah, I mean, a 20% swing in 2 months is huge. It's big. I mean, if you know, or if you take note that a buyer's market is below 12 and a seller's market's above 20, I mean, that 20% could take you from deep in a buyer's market into above a seller's market in 2 months. So it's
Yeah.
drastic and it's very worth noting. We find the sales to active listings ratio the probably strongest single indicator of where prices are going to go. So
Mhm.
we've seen this drop, by 20 points in just 2 months. It's going to continue at that trend. I don't think it's going to go that fast, but this is putting us into balanced market territory, likely within 3 months.
Yeah, I mean that's the interesting thing. When I look at this particular statistic, Um, it certainly points that we're headed towards a balanced market. I guess my question is, are we going to find resistance at a balanced market level, or are we going to continue going down and into a correction for a buyer's market? It's hard to say right now. Um, but before we get into that, maybe we'll still break apart some of the individual sales to active ratios for detached townhomes and apartments. So when we look at detached homes, the sales to active ratio is 29.8%, call it 30%, but that's down 20% in the last 2 months. We look at townhomes, it's the highest at 53.8%. No shock there. We just talked about that. But again, down 20% in 2 months. Yeah, right. And we look at apartments, 43.5%, still strong seller's market, but down 17% in the last 2 months.
Yeah, so you've
So
got all property types are dropping in and around 20% over the last 2 months. Very, very quick ratio deceleration, let's call it. And do keep in mind, it's been over about September of 2019 since it was the last time that we saw a balanced market. So almost 2 years since it's been balanced. We've been in sellers for that long.
yeah, and let's put that into perspective because we did have the coronavirus, we did have interest rates drop, we did see a huge repurposing and I guess use of utility in a home change, which kind of changed up the market for a little bit here. That being said, it seems to be well, it's not seems to be, it is cooling now. And as a result from that, I think the other thing, Dan, I just think with the weather, with how it's been in the last, month here and where it's going, I think people in the last 20 months are getting excited to focus on something other than housing. And, and when you look at the fact that we've all been more or less trapped in our homes for the last 20 months, I think there's going to be a huge desire for people to get out and do something different. And whether that be travel to the island, travel to the interior, so on and so forth, I think people are going to start doing some other things. And I think that's a good thing too. We need to give this market a bit of a break. it's been, it's been, it's been on a tear, right?
Yeah,
So
it's been so one-sided for so long. Honestly, a balanced market is unquestionably our favorite because it can
yeah, for sure.
benefit, kind of both buyers and sellers. There's room on either side, and that's really kind of when negotiations matter. That's when marketing matters, and that's when people kind of have a lot more opportunity and choice, and it's just a better experience, I think, for everyone involved overall, right? Obviously, in this market, sellers are quite happy, but again, you then frustrate the buyers immensely.
Okay, so just contextually here, if I'm a buyer, would you tell me to continue waiting, or would you tell me that my opportunity is now?
Right. So as a buyer, definitely wait because we're still deep in the seller's market, right? 39% is well above the 20% to be in a seller's market. But when we say wait, wait for, well, again, we don't know everybody's scenario. So obviously, give us a call and let's have a discussion about what works for you. But generally speaking, wait for the balanced market because it does look like it is coming our way. Um, we did some
Or
research though about buyer's market, and a lot of people think that they should kind of hold out and wait for a buyer's market. This fascinated us. It may surprise you as well. Going back as far as the data exists for us, which is 16 years, it goes back to 2005. It's only been in 17 of those months total that have ever been in a buyer's market. So that's 17 out of the last 197 months have been a quote unquote buyer's market. That gives you like a 0.8% chance of the market being in buyer's territory. So don't hold your breath thinking that's when you should be buying. Be very happy in a balanced market if you're looking to be able to find good opportunities and maybe shave some money off of the asking price.
the other thing to consider is that if we do actually end up in a buyer's market, it won't stay there long. And I think that's what that stat also tells me. It doesn't just tell me that we often operate in a seller's market, which is definitely the case in Vancouver, but trending towards where we're at right now, even if it comes down to 22, 21%, you're still in a seller's market. It's still a much better time for you to buy than it is, say, now, or even 2 months ago. I mean, it's impossible 2 months ago. It was very difficult. So on the flip side, though, Dan, if I'm going to sell my place because, for whatever reason, I had a COVID baby and now I don't have enough room, um, and I have to sell, what what are these stats telling me from a selling perspective?
Right. So things are cooling down noticeably. We can tell you that a lot of these properties, that used to get, double-digit multiple offers, are sometimes only getting one or two, and more properties than ever are getting zero offers on
Mm.
offer day if they're holding right now. And we're seeing, the price trend is going the other way, which we'll dive into in a moment here. But essentially, as a seller, very important to have realistic expectations that you're not going to get March's numbers. You're not going to get the interest there. And if you do not price ahead of this market, then very likely your property is going to sit and you're going to be talking price reduction very quickly. I can tell you, we get a lot of emails from other agents and other properties. We're now getting 3, 4, 5 price reduction notification emails about properties every single day.
Yeah.
So, it's just about being realistic. If you have to sell and you want to do it timely and you want to get a good market, you don't want to, do price reductions, chasing it down. You want to get just ahead of it and get today's price for your home.
That, that's very good advice, because I think, in the last few months, it was all about who could achieve the highest price in the sale, right? And I think now it's moving away from that and moving who's going to sell next,
Yeah,
right?
it is.
And
And Ryan,
that's,
just before you jump in there, I just wanted to kind of
yeah,
talk a little bit more about your comment about the buyer's market and how it doesn't stay there long, because it's a
yeah.
very, very good point. And I just dove into, excuse me, the stats here. The longest it's ever lasted in a buyer's market in GVRD was 8 months. And that was, of course, during the financial crisis of 2008, 2009. So huge buying
Wow.
opportunities there. But guess what? Most people were afraid to buy then.
That also skews the stats big time. If it's
Hmm.
like the vast majority of that buyer's market happening in one point in time over the last 16 years, it points to the stability of the Vancouver marketplace. It points to the resilience, the desirability, a number of the fact that we don't build enough homes, all that kind of stuff.
Hmm.
So when you look at the system as a whole, yes, it's softening, but it's not going to last there forever. And I think as soon as we start to see, permanent residence numbers starting to jump, the opening of the borders, growing economic activity, I think when you start to see a lot of these tech companies bringing all their employees across, once a lot of this retail office space is built for them, I think, you could see potential another little housing boom from a lot of the people that are coming here. Right. And that might be over the next year and a half, 2 years. But generally speaking, like I said, I don't think it'll last long. I think it's going to be a lull. I don't think you're going to see a huge change, um, from what we've seen over the 10-year trend.
Yeah, very good point. And something else came up on the news the other day that I want to touch on, because it's a bit of misinformation being shared, or at least not the whole story. Because we are deep in a seller's market, and because multiple offers and having to go subject free is still the case for some properties in some areas. Ryan will
Correct.
definitely attest to this week alone.
Yeah.
Um, the
Yeah, I can tell you right
article,
now. I mean, if you want, I mean,
yeah.
we were looking at a townhouse priced at 1.199, got 7 offers, sold for 1,325,800, and we lost by $5,000,
Oof,
which sucks.
yeah.
But anyhow, the point being, that it's still happening, right? And that's in that townhouse market, which is still red hot, right? So it's important to note that, in the current present day, for townhomes especially, we're still seeing fist fights for the right property in the right areas, right?
Hmm.
Um, but the attitudes are changing, right? So, I mean, I have, my buyer afterwards was of the position of like, well, maybe I should just wait a little bit until the summertime when things are a little bit cooler, and then I don't have to, do a pre-inspection, keep dropping money, all that kind of stuff to try and buy a house. And that's due in part to the statistics that we're seeing. right? So
Yeah, and
we'll see.
that pre-inspection is exactly kind of one of the items that I'm talking about here, because this news article mentioned that talked about how incredibly risky it was to put in subject-free offers. They're only risky if you don't do your due diligence before the offer. And that's something that you can absolutely do the same amount of research and diligence on a property that you would do if you had an accepted offer with subjects, as if you were doing doing that due diligence prior to the offer and going in subject free. Subject free doesn't mean risky. Going in without doing the work, subject free, is incredibly risky, yes, but it's a big difference, because
Context.
you could technically get a subject offer, do none of the work, and remove subjects. That's equally as risky. So just make sure you understand the full story, that subject free doesn't have to mean risky, right? So we've done research on properties and said, hey, don't offer on this property. It's just not worth it, or it's in bad shape, or whatever the case may be, or the documents read poorly. Other times we're like, yeah,
I,
this property is in great shape. You know, the inspection's been done, the documents have been read, insurance quotes in place, financing's in place. Great. We feel 100% confident in your ability to purchase this home at X price range.
and I would actually say, in many instances, when we're about to write a subject free offer, I would say I walk away from more property than I do write on it. And that's a result of making sure the home is inspected prior to us offering, looking at all the financial details with the mortgage broker up front to make sure that that makes sense. What are the risks and liabilities associated with that, right? Checking in with the lawyers to make sure that the closing times are all in sync, so you're not going to have a problem, with conveyancing on the legal side of things. And you do all of this stuff up front, right, to minimize your risk or mitigate it. Anyways, there's still always going to be a risk, but you can, like Dan said, you can totally mitigate that risk by doing your due diligence. But that comes down to having a plan and being prepared and knowing what you're doing, especially in a really hot market. So, anyhow, let's get on to price, because price to me
Yes.
is, well, kind of what everyone's here for.
Absolutely. So if you listen to our presentation a couple of weeks ago, we said that prices are falling, and it raised a lot of eyebrows, understandably. Within that, we also mentioned that the HPI price will be higher in the month of May's stats. And that is true. That is true. And the reason that's true is because, again, it's a bit of a lagging indicator compared to median and average prices. And that's okay, right? Because it's a true data point. It's one that we rely on, but it's certainly not the only one you need to watch when understanding what to do with real estate moving forward. So that's the long-winded way of saying HPI price is up about a 1.5% over last month. Your average home now, $1,173,000. Big note, 14% higher than it was just 1 year ago, and up about 19% since the bottom of the last cycle in August of 2019. But yes, and like we said, that's not the whole story, right? The
Yeah.
board generally releases a press release that talks about HPI price, because that is their adjusted price based on the most sought after property types. And it's a good number. It's something that we rely on all the time. It's worth looking at, but we have to look at more data to get the full story. And here we go. As we discussed a little while ago, median prices dropped $31,000 last month. That's 3.5% in just 1 month. And definitely worth noting, that is the biggest drop in median price that we have seen, outside of sort of your average December numbers that always drop because there's such little activity there, in about 4 years.
Wow. Wow. Yeah, you can't ignore that, right? But it seems to get ignored. That being said, too, I mean, you got to remember price is a lagging indicator. It is not a forward indicator of what's happening, right? Price is typically taken from the stats of the last month, right? So when you look at the HPI price and you go, wow, well, that's up, that must be good. It's not where the trend lines are going. And that's what, as a seller, you might get hopped up and caught in, right? Thinking, well, hold on, though. Prices were up last month, so I should continue pricing up. No, don't do that.
Great way of putting it. Yeah, that's just it. And I think the reason we're making such a big deal about the median and average price is, again, we haven't seen a price drop. I think I just said 4 years. It's actually 5. They haven't dropped that much since July of 2016. But the reasoning is very important as well. because the reason it dropped so much in July of 2016 is because that's when the foreign buyer tax was announced at 15% at that time. And it made the whole
Mm.
market just kind of stop and pull back and go, what do you mean that
Whoa.
policymakers can just throw a tax on, on a whim? And I think they activated it like I don't know, a week or 2 or 3,
It was three weeks. Yeah.
3 weeks
From the
within the
announcement to the
announcement.
implementation. Yeah.
Right. So
Yeah.
it just sent a
Government.
shockwave through the whole industry because people are like, "Whoa, wow, we
Yeah.
didn't know that, real estate can be taxed that heavily that quickly." So people understandably
Yeah.
pull back. And then I guess what my point here is that this 3.5% drop in median that we just saw last month happened without any real policy changes. Yes, there was the increase in stress test that takes about 4.5% buying power away, but not 15. And it's kind of happening a little bit more organically.
Yeah. I mean, generally speaking, for example, when the Bank of Canada does an interest rate change, right? We typically don't see the results of those interest rate changes for months, right, as they filter into the economy. And I think here what we're seeing, we've talked about some major reasons as to why we've seen numbers drop like this in the past, but here I think it's important to note that we're coming off of all-time highs, right? And we've had talks about stress tests going up. We've had talks about interest rates going from 2023 to 2022. And all of these sort of little announcements are, I think, having an impact on buyer behavior, right? Especially the rise of mortgage rates, which we're seeing, the 5-year fixed rates well in and above the 2% mark now, where they were down, 6 months ago, they were 1.5%, right? So we're starting to see the banks start to inch things up, which is greater levels of economic activity, which is good for everything else as well. So we can't just say it's all bad, because it can't just continue on going up either. So with that being said, let's look at detached homes,
Yes, sorry.
because to me, I think.
I feel like I
Oh,
skipped
go ahead.
over it, but if I didn't, I'm repeating it. I guess it's still important. But we touched on median prices dropping 31,000. Average prices also dropped 31,000, interestingly. But because the average price is higher, it's the percentage is a bit smaller of 2.5%. Either
Mm.
way, both significant drops, both the biggest drops we have seen in 5 years. And we believe both are going to continue that way. So this is why we're putting so much focus and attention on median and average price declines.
Yeah, you look at those two. I mean, if you average the two, right, you're looking at about 3%, a 3% drop over
Yeah.
the average and
In
median
one
price,
month, that's a
right? In
big,
1 month,
big
which,
shift.
yeah, that's a big move in a housing market.
Okay.
Anyways, let's get on to detached sales. We saw 1,430 sales of detached homes in the month of May, which represents a 166% increase from May of 2020. Again, there's some benchmark relevance there. That being said, though, the average price is astonishing, 1.8 million. That's a big number. That's a big number for a house.
Yeah,
But
and
it's
that's
what
the
it is.
average. Yeah.
That's the
Well,
average.
and the increase is a pretty big number as well.
Yeah. So 22.8, 23% increase from this time last year, right? That's a huge swing, um, at that price point. I'm not quite sure what that amounts to in terms of actual dollars, but it's going to be hundreds of thousands, right? So um, a 1.7% increase compared to April of 2021, though. So something to note there, a much smaller uh, increase in price month over month.
$350,000 price increase on average in the last
Oh,
12 months for detached.
why would you even go to work?
Just buy real estate. You say that, and then you see the next data.
Yeah, the next data points are crazy. Again, going back to median and average price points, right? So the median price for a detached home is down 75,000. That's a whopping 4.5% in 1 month,
Mm-hmm.
right? And the average is also down by 43%, so 2.2%. Again, falling somewhere in that average of 3%, right?
Yeah. And again, you have to go back 5 years to see any kind of similar price reduction or reduction in a single month. So definitely worth noting, again, based on it not being a policy driven kind of freak out drop.
Yeah, it kind of speaks to you know, some overheating. It speaks to prices getting a little carried away, I think, and now we're starting to see a bit of that pullback, right?
Yeah.
Um, but again, how it continues is the important point, right? Because markets will correct all the time. Whether or not it lasts for a long time, which Dan and I earlier spoke about, I don't think so, but it will correct a little bit. So let's go to
Absolutely.
condos.
Let's go to condos. About 2,050 condos sold last month, 213% over last year, because obviously it was a slow month in COVID. But the price, average condo price now $737,000, about an 8% lift from just 1 year ago, and a full 1.2% over just last month. HPI numbers. If we go over to the median and average, here we go.
Uh-oh.
Yeah, median and average both pointing down, though not as dramatic as detached. We've got only about $3,000 median drop, about 0.5%, and then your average is down about 21,000, but that is 3%. So we're hovering in
Mm-hmm.
and around 1.5% on average between those two indicators.
And I think it's important to realize, people might ask, well, why isn't it as great as the detached market? And you got to remember, there's so many more condos, right? So the inventory levels of this asset type will there's just more by comparison. So they seem to move a little bit slower in terms of price point and inventory levels. Anyhow, on to townhomes.
800
There,
townhomes. Oh yeah.
that's it.
Sorry if I stole that from you,
uh,
but
no, that's fine. What that represents, though, 168% increase again compared to May 2020, which is a bit of a throwaway number. Um, but the average price, is $936,000. Man, I remember when I remember when they were a lot less than that, and it was not that long ago. You
Mhm.
know, and this time over last year, that's a 16.3% increase. That's a lot of money. That's a lot of money. Um, we again, it's kind of in line with condos. We've seen about a 1.8% increase compared to April. The median price, though, down 10K, about 1%, right? The average is the only one that is up, but it's only up by $750, which, if you ask me, is a moot point, I should say, representing a flattening of the average price. Um, and anyhow, so that ends
Yeah.
the stats for those three asset classes, unless you want to add anything to it, Dan.
No, but we can just jump ahead to days on market because this is an interesting one. We are looking, well, actually, all asset classes are in the same boat here, but we are actually at all-time lows for the third month in a row with the average days on market of 8 days. Every
Wow.
home is selling
Wow.
in a week right now, on average. March saw that number, April saw that number, and it's I think a real indicator that we're sort of seeing this like cross section or crossing of data. Right, a couple things are still kind of maintaining going up, and then a whole, even more are pointing down, as opposed to the last 20 months, of course, where everything pointed up. But everything goes in a cycle, and we are seeing that we are past that peak. We are starting the downward trend, and these other numbers, things like days on market, you're going to see that increase quite soon.
Yeah, let's not forget, days on market again is a lagging indicator, right? It's not a leading indicator, right? So to your point, Dan, yes, it still looks like March and April, but again, it's lagging data, right? So going forward, we are expecting, with all of the other indicators pointing to a shift downward, that's going to grow in terms, meaning your home will take longer to sell, right?
Yeah.
Buyers are having more selection. That's why. So.
Yeah, good point. So I think as a bit of a summary, we're obviously seeing, the sales are easing. They are slowing down from the record peaks back in March. Um, Partially, I think just a bit of buyer fatigue, a bit of seller fatigue, even. I think after a 20-month run up, it's going to start running a natural cycle. We haven't seen the immigration yet. So, the predominant amount of homes that have sold have obviously been for end users that live here that were just looking to make that pandemic property theirs, because who knows what's going to happen in the future. And they want to live in a home that they're happy with should the world shut down again.
Mhm.
We've got the
And take
revise.
advantage of those low interest rates, right? That's the
Yeah,
other
of
side of it.
course. Yeah. And as we've seen those start to tick up, the interest levels are going to wane a little bit. right? People are
Yeah.
going to feel that they can't get the deal they did 6 months ago. And maybe that'll be enough to push some people out of the buying market.
Yeah, I think, it's interesting right now because we've got properties kind of for sale and buyers buying properties in every element of the marketplace right now, including multifamily apartment buildings for sale, all the way down to working with $500,000 buyers, and you know, still seeing on the higher end of the scale. Certainly, it's slowing down. I think though, when you look at the affordability levels, you look at the five, 600, $700,000 range, still very active, still seeing multiple offers. And I think that's also a function of affordability, which we're not really talking about here.
So to wrap things up here, what's our predictions? What's going to happen in the next 3 to 6 months here?
Yeah, I think summer is going to be on the slower side. It's going to continue this downward trend through summer. Um, and again, I think a bit of relief for buyers, which is going to be nice. I think we're going to move a little bit more into a balanced market, or at least closer to it. We're going to get out of these high 30s, I think, into the mid 20s. Whether it goes down from there will be a function of maybe some of the other impacts that happen in the economy at that time. How quickly do we open the borders? Do we all go back to work in September? There's lots of factors that could potentially swing or change activity levels and prices. Um, and that's why we can't really look past the summer at this point.
Yeah, good point too, because I believe, like you mentioned earlier, people are going to take the summer, they're going to enjoy it, they're going to travel as much as they can, they're going to see family members they haven't seen in 18 months, and real estate is going to be put to the far back regions of their minds. But come September, come school looking potentially more normal, more like the good old days when people start going back to the office and they start coming back downtown, and that whole region revitalizes. Um, People are going to start maybe having to move again in the sense that, hey, you thought you'd be working it from home for the rest of your life. Well, maybe the boss doesn't agree with that, and wants you a little bit closer and in the office 2, 3, 4, 5 days a week. Maybe some people will get secondary homes closer to the office. Real estate is going to start to have attention put back on it. Definitely come back into fall, September, October. And I think we're going to start to re-enter the sort of typical-ish cycles that we're used to seeing with an active spring market and an active fall market. And that's going to really kind of kick back into effect starting this fall.
I think it's important to kind of remember, and the reason why we say this, and the reason why we think that there, come September, and you're going to start to see, you know a balancing, maybe even a bit more of a run up again in September. Um, you have to consider the fact that right now, approximately in the downtown core, there's about 3.5 million square feet of new office supply that's being built in the downtown core. That's a huge number. And that is to take into account the Amazons, the big tech companies that are here, and the fact that they are going to be moving their employees back, whether or not they work from home part of the time and from the office part of the time. Um, the point is that with all of this construction, there's going to be jobs. And when there's jobs, there's real estate, and people need to buy and live in a place, right? So I think the long-term trend is going to look pretty good if you own real estate. I think if you're thinking of buying and the opportunity through the summer, and you're here and you can weather that storm and not just go away for 2 months. I think there's some buying opportunities that are going to be coming, but they're going to be in the short run. They're not going to be in the long run. So I think you should take that into account, because when you look at the commercial side of stuff and what they're anticipating, and then you look at what's happening in the residential side, and there's a bit of a cooling, there's going to be a bit of a lull, and that for buyers is a good time.
Yeah. So if we do hit that balanced market or even dip into a buyer's market, remember
Bye.
what it felt like.
Bye.
Well, just remember that that's what you're waiting for, because it always seems counterintuitive when it happens.
Yeah.
But yeah, just remember that that's kind of what a lot of people were looking for. And of course, we're happy to look into your unique situation and advise accordingly on what we think is best for your goals.
Yeah. I don't think there's anything else we want to touch on here on this episode, Dan.
That's we're good. We're good. Thanks so much.
Yeah. And again, if you haven't hit that subscribe button, you listened all the way through, thank you very much. And we will see you next week.